Hello and welcome to Commodity Champions. I'm Manisha Gupta. On today's show, we bring you insights from global leaders in the energy sector who were in the country for the India Energy Week. Prime Minister Modi inaugurated the second edition of the summit. In his opening address, he said India will see investments worth $67 billion in the sector in the next 5 to 6 years. The Prime Minister also expects India's oil demand to double by 2045 to a whopping 38 million barrels per day. He invited the world to invest in country's energy sector. On the sidelines of the summit, I caught up with Simon Flowers, Chairman and Chief Analyst of Mackenzie, and began by asking him about where India stands in the global oil market.
What we're seeing is China still being a real force in the oil market globally, and in Asia in particular, and that's going to change over the next 2 or 3 years as China demand begins to peak by the end of this decade, and we see India take over as the fastest growth.
So are there any numbers that you're working with in sense of what kind of growth are we looking at? Because right now, as per the OPEC report, India consumes 5 million barrels a day, which can go to 11.5 by 2040. I mean, that's the kind of numbers the agency is working with.
Well, you've got to remember the background behind this is India's incredible economic growth. So it's fourth biggest economy in the world, and the fast growth means it's going to be, what, third by 2030, 32? So yeah, I think those numbers are very aligned with ours.
And then when we talk about renewables taking over, there is conversation about hydrogen and biogas and natural gas and the right mix of energy that India should be looking at as well. What's your sense on the way India consumes energy as of now?
Well, like most countries, it's still wedded to fossil fuels. You mentioned oil, there's gas, and of course there's coal as well. And I think there's been a dawning of realization over the last 2 or 3 years that the transition isn't going to be a quick fix. So if we start with fossil fuels, India is going to need those for a number of years. It imports a lot of oil and a lot of gas, and both of those are going to increase in the next little while. And the transition into these new things, well, India is really a leader in experimenting with the new low-carbon technology. So renewables is a given, and India's already got a great platform, going to triple that by 2030, that's the plan. But it's also really interesting how much investment it's trying to encourage into the things that you mentioned, like carbon capture and storage, energy storage, and hydrogen of different colours, but particularly green hydrogen.
What's your sense on the demand for the fossil fuels, for crude right now?
Well, thank goodness for Asian demand, because it's helping propping up the oil market. So on the demand side, the world has been through a bit of a slowdown, but actually oil demand, as we bounce back from COVID, has been almost rampant. So we're still expecting maybe as much as 2 million barrels per day, which is, there's only been half a dozen years since 2000 that it's grown at that pace, and demand itself is at record levels. The problem we have from a fundamental point of view is that there's ample supply. So we've seen OPEC Plus cut 3 million barrels per day off the market over the last year. It's an enormous amount of money they have hidden behind pipes because there's not enough room on the market. Now, I think the interesting thing that you allude to now is there's considerable, let's call it geopolitical tension, but there's also military activity. The response by the US-led group on some of the the sort of terrorist activities going on in the Middle East. But the crude price hasn't gone up. It's quite incredible. It's been trading in a fairly tight range of $75 to $80 a barrel. And I think that reflects two things. One, that no production has been hit. If production gets hit, then there will be problems. And the second thing is that buyers know there's more oil that could come onto the market. Right,
so you know, Simon, earlier the markets would also move, even if there was a sentiment impact. Would you say that that's totally absent right now?
I think it's absent because there's so much spare capacity at the moment. It's crept up on us, this spare capacity, through more effective investment in non-OPEC countries by some of the Middle Eastern producers investing in their capacity. But suddenly we find ourselves with record demand, but more supply than is really needed. It's an unusual state of affairs we've not seen for many years. But fortunately it's kept a cap on, because the world can't really afford to have high prices at the moment. It would stifle the recovery, which we do think is coming over the coming months.
So what's your sense on where the prices are headed? Because as you said, we've closed last year with a bit of a negative, and we've started this year in a very, very flat range.
Yeah, we've been surprised at the sogginess of prices actually, and what we're expecting through the course of the next few months is a bit of a pickup in the global economy. That'll tighten fundamentals, allow OPEC to get some more oil out onto the market. And so we'd expect prices to improve from here. We think $80 is a good benchmark, not much different to what we are today. But there's a risk, I think, over the next few months that we could see higher prices. Maybe not as high as 90, but somewhere in the mid to high 80s.
All right, so $80 a barrel, but can go to 90 before we end this year is the view coming in from Mackenzie.